Welcome to our Financial Wellness first RecruitAGraduate webinar. I'm Philippa Geert, CEO and founder of RecruitAGraduate, and we started RecruitAGraduate in 2019 to be part of the solution of helping youth find jobs. Well, actually helping employers more easily access graduates and find graduates where they don't have their own graduate recruitment programs. And Lee and I connected because we have a very similar heart around youth and youth development and how do we make a positive impact for youth in South Africa. And Lee is from Lucha Lunako. She's got a finance background. She was with Alan Gray, and she actually moved from the corporate space into this social development space and is our presenter today. And so as part of Youth Month and part of our celebration of Youth Month, we wanted to give back to all graduates who are probably in their first job and now needing to grapple with what do you do with your finances. But Lee, before we kick off with your presentation, maybe you could just talk us through a little bit more about your background, and then you can kick us straight off into the seminar, just given we've got a little bit less time.
Thank you so much, Philippa. As you rightly said, I did move from the corporate world, enjoyed it quite a lot. I do have an accounting degree and a finance background, spanning over about 10 years. But I was, the main reason that I moved out of corporate actually, and specifically finance, was that I had been working in an environment where they were servicing clients in the billions, clients that had wealth portfolios that were exorbitant. But the one thing that I noticed was that the difference between where the amount of money that people had, where they had started, was actually just knowledge. You know, people were knowledgeable about what to do with the little that they had, spanning from how you think about money, your relationship with money, etc. And I retired myself, or dedicated my life to saying, look, I want to see most South Africans participating in this finance landscape. And it truly begins with money management. It begins with when you start earning even your stipend as a child. You know, when you're doing chores around the house and you get money, how do you manage that? What was communicated to you, etc. And then it moves across to your finances in the workplace. And so that's what I've dedicated my life and have been doing for the last 8 years, is educating in various settings. I speak multiple languages, which is quite a plus, because sometimes speaking about money and there are these big jargons in the finance sector, you lose people. And so because I have an ability to speak in Afrikaans, Sotho, Zulu, I can meet people where they are in a language that they understand. And truly mine is to demystify this big thing called money, or sometimes scary and uncomfortable actually, to make it a part of our everyday lives and see how it's a resource that can help us build wealth over the long term and enjoy it, by the way. So we're not trying to have these workshops and say, let's manage our money well. Let's enjoy financial wellness in the workplace. Let's just enjoy our hard-earned money. And how do we do that? And that's what we're going to talk about today, hopefully.
I think it's such an important topic. I think that there's an assumption that people know how to handle money and know what to do with money. And it's also something that people don't like to talk about. So I am very excited that we get to host you today and to talk about this really vitally important subject. As you will have realized, that this is quite a casual discussion between Lee and ourselves. So if you have any questions, pop them in the chat, because we will get to them towards the end of Lee's presentation. So Lee, do you want to kick us off?
I am going to kick us off. I'm going to try and see if I can share my screen. Let me know if you can see it.
It tells us that it has started screen sharing, so I'm sure it will come through.
Let's see if there's your screen sharing is loading on my side. But while that's busy,
yes, we can see
we've got quite a number of people from quite a few establishments here. If you could just put in the chat, let us know where you're from. I see people have already started telling us they qualified in this particular sector, and let us know where you're from. Which company are you representing? That would be nice for Esther and the team to also know where you're from. But to kick us off, I thought let's have a few topics that we can cover today. We don't have too much time, so hopefully we'll get through them. What Philippa has asked us to do is just a boot camp style. lunchtime chat. So it's a chat, ask questions. It's really just to kick us off our financial wellness journey in the workplace. And first things first, we're going to speak about tax, very high level, nothing intimidating, hopefully, and nothing you haven't heard, but maybe just reminding you of the importance of it, because first we must get the legalities right when it comes to money, and then we can move on to the next thing. And then we're going to speak about employee benefits. And we'll speak about employee benefits, both internally looking and externally looking as well. And then we'll have a look at your credit health. Now, all these things that we're discussing here today are very, very critical for your financial well-being, particularly in the workplace. Obviously, over spills to other areas of your life, but we're focusing on the workplace for today. Then your income. What does doing more with less look like? COVID is anything to go by. Some of us lost businesses. Some of us may have been in a place where, we were called into boardrooms and told, look, we must cut salaries in order to save everyone's salary. Maybe you were in that position. How do we prepare for the future, and how do we prepare going forward for such situations? And then the important documents folder. Whenever I say this, I always find people saying, but what does that mean? And you will find out. But there has to be a document where all your important documents are kept. Now, the question is, what kind of documents should be kept there and why? And we'll look at that and hopefully wrap up with that for the day. So we've got quite a comprehensive list of topics to cover, and we'll try and do it as quickly as possible. We've lost a bit of time, so I'll allow about 10 to 5 minutes towards the end for any questions, for any reflections as we go along. So please write them down, whatever questions you have, and then we'll try and address them at the end. Looking at SARS, right? Here is something that says, Dear SARS, I would like to cancel my subscription. Please remove my name from your mailing list. That you are in the workplace means you have automatically subscribed to SARS. Subscribed in inverted commas. Now, you cannot cancel that subscription. Even when you are unemployed, it is important to communicate that you are unemployed, because you are now listed as a tax-paying person. So in the years that you are unemployed, or you are on, people tend to take extended maternity leave these days, people go work overseas or are seconded by their companies, etc., you still need to submit your income tax return, right? I've given you a date there just to give you a heads up for you to start preparing. The tax season normally runs from the 1st of July until the last Friday of November. That's more than enough time to ask questions. The SARS contact center is not the most, what is a diplomatic word of saying, not very responsive, if I can put it that way. So if you have questions, I would encourage you to already start contacting them around some of the questions that you have for them, so that by the time the deadline comes of submitting your tax return, you're not going to start incurring penalties, right? You will incur penalties even when your tax return is zero, and even if you weren't supposed to, there's nothing to submit, you still need to submit it. The fact that it's zero means that you need to tell them that, guys, I haven't earned anything. And therefore I don't need to submit my tax return. So that's really a tax. What you need from your employer is what they call an IRP5 if you've just started working. So they will normally give it to you during this period between now and the 1st of July. If you do not receive it, it is your responsibility to obtain it from your employer. You take your IRP5, and when you are completing or submitting your tax returns, you're looking at your IRP5 and you're saying, employer, what an IRP5 is, it's a summary of all the tax deductions that your employer has made for the year. Now you compare that to what is written in SARS, right? Sometimes there's a mismatch, but very often not. If your HR department or your finance department has been doing things meticulously and correctly, there shouldn't be a disconnect. It's really not that difficult, but if you do need hand holding, now is the time to get hand holding, and not in November, because you're unlikely to get hold of them in November. That's our taxes covered. Now let's move on to employee benefits. I don't know I'm not sure in terms of the spectrum of the kind of employees we have here. Is it junior, middle, or executive level staff members? But employee benefits may not necessarily, sometimes we think of employee benefits only related to insurance or retirement benefits. There are other benefits that I will talk about just now. Let's look at group life benefits, right? So group life benefits, if you have on your payslip, and this will tell you, if you've got on your payslip a line item that says group life, it's a deduction, right? You have a responsibility to find out from your service provider what you are covered for. There will very often be things like, it depends, it's some or all of them, or one of them sometimes, right? When you're looking at the group life benefits, there are things like life cover, but you need to find out for how much life cover do you have? Is funeral cover, what extent are you covered? What are the benefits that you get should you pass away, etc.? Disability, is the disability purely related to your employment place, or is the disability also related to any other activities anywhere else when you are not in your employment? Then income protection cover as well. When you lose your job, does this group life benefit cover you in the event of retrenchment, in the event of the organization where you work closing? And then medical cover as well. Medical cover sometimes is a line item if it is not insurance. You also need to find out from HR, do you have medical cover with your employer, or do you have medical aid? Because those are two different things. Medical aid, you will contribute monthly, but you're able to walk into a hospital and depending on the type of plan that you have, walk into a hospital, get your operation, walk out, etc. With medical cover, they'll sometimes say there's specific things that we're going to cover. If you're having an eye operation, for example, medical cover will say, we'll give you 2,000 Rand for every day that you are in hospital. That's completely different medical aid. Now, your group life benefits statement, you should be checking at least annually, so that you can see that the money that's being deducted from your salary is being paid over, and your benefits are in line with what HR is communicating that they're paying over to the insurer of your group life benefit. And also, equally important, what people tend to do is that if there's a funeral cover that is covered by the employer, people then go out and take out 3 more additional funeral covers. Let us remember, colleagues, that we are dying once, hopefully, right? We are dying once. We do not need 3 coffins unless we want to build mansions at the grave. One comprehensive funeral cover, if you must have it, should be sufficient if you've got it with the right people. If you've got life cover that already covers the funeral benefit and says, we're going to cover you for R1 million, but at the time of death, we are going to pay your family, 40,000 Rand towards the funeral. That should also be adequate if your funeral cover was also going to give you 40,000 Rand. If it is part of group life, you are paying less because there's more people in the entity, your premiums are less. It's not really necessary to go then out and take out something in addition to that. Unless you've got life cover and your life cover doesn't nearly cover all the debts that you have. I'll give you an example. If you've got life cover as part of group cover, but life cover is only going to pay out 500,000 Rand, but you've got a home loan worth 850,000 Rand. The last thing that you need for your family to lose their family home when you have left. What you would look at is to say, right, I'm probably going to get additional life cover just to cover the cost of my home loan and any other debt, so that my family, the only thing that's missing is me. I'm not leaving them with debt, right? So you have a responsibility again, and I stress that, to find out what you are covered for and to what extent you are covered. So what is the amount? What is the policy itself? Is it medical, disability, income protection, and to what extent? What kind of, can you continue after you've left the employer? Or does it just fall away? if it's, let's say, with momentum funds at work, as an example, can you continue in your individual capacity when you leave your employer, or would you need to start something new? Those are the considerations that you start thinking about now if you've got group life benefits. If you don't, then it's also a consideration to start thinking, what do I need now, or what may I need in the next couple of years? As a hint, the more you get assets, the more you need to think about insuring what you have, right? And then retirement benefits. So these vary from organization to organization. Some organizations, and by the way, it's not compulsory for companies to have any of these benefits. They choose to have it, the company policy, but it is not compulsory for them to have it. So you can't take them to court and say, my company does not provide group life or retirement benefits. They don't have to. It's your prerogative to make sure that you have them if you need them and if you want them. The retirement benefits come in the form, 3 different forms. There's the pension fund, the retirement annuity fund, and the provident fund. What you would ordinarily also ask your HR department, sometimes they disclose it during onboarding, but very often people can just go up to them and ask them about it. When you contribute to any of these pension savings, they also additionally contribute. So what they'll say is, Lee, you are going to earn 10,000 Rand, but 1,000 Rand is going to go towards your pension fund. But we will match that. So instead of paying you 10,000 Rand, we're going to pay you 9,000 Rand because 1,000 is going to go to your pension, but we're going to match that and give you an additional 1,000. Now you're contributing 2,000 towards your pension fund. So find out. You have additional benefit with the benefits that they have given you. And then also your provident fund as well. Provident funds and pension funds work very differently. Find out what kind of pension you are contributing to, because that will determine what happens to your money after the age of 55 or when the two-pot system comes into play. So all of this depends on what you do or how you retire. And remember, retire nowadays, when we say retirement, we're not necessarily talking about sitting down and doing nothing. There's hardly elderly people who sit and do nothing. Some people become athletes and they become age category winners, etc. So you hardly find people sitting down. What we're planning for when we say retirement is to say, the choice really is for you to get to the age of 65 and say, do I want to work this hard, or do I just want to start withdrawing from the little kitty that I saved all these years, and then find a hobby that will also give me additional income? That's what you're really doing. You're saying, I may not have the same energy at the age of 70. And when I don't have that kind of energy to be waking up and doing what you're doing right now, something else has got to help me sustain myself. That's pension benefits. And then you've got what we would call something like education benefits, but in that category as well, it's other kind of benefits. So corporates or entities will sometimes fund the employees to study further, either through internal courses. So there may be leadership courses where you work. There may be in mining companies, they may offer continuous professional development courses or specific career paths internally. And then sometimes they could say, look, go on, do your postgrad or PhD or whatever, and we will fund it as an entity. Find out, because instead of you applying to study part-time somewhere, maybe the company's got a policy that we fund postgraduate studies related to our industry to the value of X. The only catch or the only exchange that the company expects is that for every year that you pay for your studies, then you must probably work an extra year. So you can't resign within the year that you are studying with them. Those are some of the T's and C's that we've seen. But find out. And then volunteer opportunities as well. People want to give back. People want to get involved in community initiatives, etc. Find out if your corporate can support you in some of the initiatives that you are passionate about, and can you support them in some of the initiatives that are part of the ethos of the entity. There's a benefit. Charitable giving doesn't necessarily have to be in the form of money, but they could give you leave days, go and teach math to students in your community, for example. Find out how you can work together with your company. I think gone are those days where we think of companies as people, we're all looking for benefits. So we're looking to add value, continuously add value. And the company is also continuously sometimes looking to add value into your life. When you come into these conversations, it's a fair exchange. It's a how do I help you? How do I help your brand become stronger outside of my area of responsibility? And how do you help my personal brand, whether it's my finances, by saving on studies where I can study further and you are funding them, etc. And then exchange opportunities as well. Exchange opportunities can be inside the organization or they can be externally. Inside the organizations, sometimes people move horizontally. They move to another department and get seconded for a month when there's a maternity gap or anything like that. And then other exchanges are industry peers, sometimes globally, sometimes within the continent, etc. Find out what you've got that is in line with your dreams and your visions that you don't necessarily have to pay for, that the company has got as a policy or has got as a benefit for the employees that you may not know about. Moving on to credit, right? So what I'm giving you here, by the way, colleagues, is very, very high level. We run an 8-week course where we are actually, we dive a little bit deeper into these topics, especially towards the end. And so I'm really beginning with the end in mind. I'm starting with the end with you and just to give you some form of structure in terms of how we would think about, or we would like for you to start thinking about, if you haven't, about your finances in the workplace. Your credit health can impact your employment. There are entities that when you are looking for work will look at your credit report. There are entities, even when you are employed, that will sometimes do a credit check annually and ask for a credit report. Now, there's been huge debate over the years of whether that's legal or not. It is legal. They just have to get your consent to check. So what will normally happen in companies is that they'll make an announcement and say, we're emailing everyone who didn't sign it when they joined us this particular form for them to complete so that we can do credit checks. And we will be doing this going forward annually or quarterly or whatever, depending on your role as well. If you're in a role where you're working with numbers, that's done quite frequently, sometimes quarterly, sometimes half year. At the very minimum, they will do it once a year. And the reason they do that when you are wanting to go into employment or you are in employment, but the role requires them to check frequently, to protect employees and customers. What starts happening sometimes with people who are in financial distress is that they start asking money from other employees. It starts making some employees uncomfortable because they are stuck between a rock and a hard place. So here, Lee is asking Philippa for money every day. Philippa's feeling uncomfortable because she doesn't really want to tell the manager or supervisor that, sure, Lee's a bit bothersome right now. At the same time, she feels for me, so she doesn't know what to do. She wants to tell the manager that, hey, I'm a bit troubled by Lee coming to my desk every single week and asking me for transport money or food money or whatever. And then it almost feels like she's betraying me at the same time. So it's to protect employees. And then customers. The example that I remember was when we did training in one of the restaurants for the staff members, actually. We did a survey of some of the customers, and we found out that one supervisor was actually asking customers, borrowing money from customers who were regulars. So because the customers were moved with empathy, they didn't tell the owner. But when it got to a level where they were being asked like every month or something, they eventually told the owner, and that lady lost her job. She needed that job so badly. So it was, check the credit report. Some companies may not fire you for a bad credit report, but they can call you in and say, look, Lee, you have to do something about your finances, because it's going to start impacting how you do your work, how you interact with customers and employees. So they do that most importantly to protect employees and customers, and also to gauge the level of responsibility when it comes to your debt management. So are you paying your debts on time? How responsible are you? Because we can all sit in an interview and say, I'm a very responsible human being. And then they take out your credit report and you've gone for 6 months without paying those debts, for whatever reason, and sometimes very valid reasons. But it doesn't look good for you. It doesn't look like you are someone that can manage your finances responsibly. But if there's a miss here and there, they can say, maybe she had a tough month, or maybe she wasn't working here, etc. So there's ways to justify it. And I'm saying that with the level of responsibility, if you know that your credit report is a bit shaky right now, you have a responsibility to download it, look at it, and if it's HR policy that your employer checks, be proactive about it. So start paying off your debts well, or paying your debts on time. But if you're really in a difficult fix, then speak to HR, hold them in confidentiality and say, look, I'm a little bit worried about this. This is what my credit report looks like, but I am actually rectifying it. And I will hold myself accountable to you by printing it again and bringing it to you in the next 6 months when I have rectified my situation. So be proactive. Don't be caught off guard where you're called into a manager's meeting because your finances are not great. Be open about it. People are quite empathetic when you lead self, and they can see. Hello. Sorry about that. I think someone was speaking, but I've muted them. And then financial soundness and distress. So what we are talking about here is your spending habits. What they are looking at here is, sometimes, especially as you get more senior, they will do credit checks to check, is Lee's getting paid quite well, for example, but we see her debt levels are they are ever increasing, and it looks like she's starting to miss a couple of payments. She's just bought herself a Lamborghini, but she doesn't have petrol money. She's asking a manager for petrol money. All these things tell a story, sometimes good or bad, about your spending habits, right? And so they can figure out, are you in distress or are you financially sound? Again, they worry about that because that leads to absenteeism. Money can be a very sticky thing. And sometimes, even when we are in stress emotionally from other life events, when there is money stress, it impacts us even at the workplace. And you'll see every now and again managers calling people into a room and saying, what is wrong? Are you okay? Meanwhile, someone doesn't even have money for groceries or for food or anything like that. So the first thing that they'll pull up is, okay, we're noticing that Lee is behaving very funny. Can we consent to doing credit checks or whatever? And that's how they get to see your spending habits. If your debt levels are 5 or 6 consumer debt accounts, credit card, overdraft, clothing, etc., etc., that says a lot about who you are. Unfortunately, it does. If it's a home loan and a car loan, and there's an investment property there, it also says a lot about who you are. If they are seeing because Truett, Sports Scene, etc., all these accounts, it's like, is it necessary? Their spending habits don't look quite healthy. And then also, lastly, must stress as well that they do require your consent to check. If they have checked without your consent, then you can take it up with them and say, I didn't consent to this. But before you do that, make sure you read your employment contract right, because somewhere in those lines that we just quickly sign and don't see, we've actually consented to you guys doing credit checks for us annually. So just double check that. Double check some of the policies as well, because when you sign your employment contract, you're saying, yes, I adhere to the policies of this company. Some of the policies are around financial management. So find out what your entity has for you. Let me just look at time. Okay, I'm going to wrap up. Now, do your income. doing more with less. This is the last part, the very last part that we do in our course, but I did want to touch on it today purely because of the first three things mainly. So let's say, for example, you are earning an income of about 10,000 Rand, right? This is after taxes, this is after retirement products, this is after benefits. So if there are retirement products for you, and if there are benefits, that's a plus because you've already started taking care of one element of doing more with less and of paying yourself first. You've got a retirement product and you've got some benefits that, while you're in employment, are still valid in your case. And then you've got the first one, which I put, some people it's last, for some people it's first, but there's faith-based charitable giving. So some people's faith, I know Christians, I know Muslims as well, believe in charitable spending or in faith-based charitable spending. That's fine. You put it there as part of so this would look like your spending plan. It's how you build your habits around doing more with less, right? The income that you've got, we often say in our training that if you've got a problem with 1,000 Rand, giving you 10,000 Rand will never solve your money problems. It's actually your habits that will solve your money problems, and not necessarily having more money. But I say that, and many people don't believe me until we do some of the exercises in the course. And you realize sometimes that I'm actually the problem. It's not my employer paying me less sometimes, right? Sometimes it is. Sometimes it's actually you. But there's faith-based charitable spending. And then secondly, after that, or number one for some people, is learn to pay yourself first. As a rule of thumb, we say start with 2.5% of your net, and then move over time towards about 10% of your net, where you are paying yourself first. And you're building a kitty that you must forget about because you are creating a habit. So you pay yourself first every single month. There's, for example, of that 10,000, 150 Rand going, and it's not money you think about. It's not money you go to for your cousin's 21st birthday. It's not baby shower money. It's got nothing to do with anyone, including yourself. You are just paying yourself first and rewarding yourself for your hard-earned income, right? And then, you're paying yourself first, and then you reward yourself. Now, some entities, especially during and after COVID, no longer pay bonuses. So build your own bonus. Build your own kitty that you will enjoy in December. You can start with 5%, right? So no, when I say 5%, people think that's so much money. Is there anyone here in this webinar who has not spent 500 Rand in 1 month, whether it is on data, whether it is on takeaways, whether it is on Uber Eats, whether it was you went out shopping and you bought, what's my weakness? You bought chuckles as you were doing your groceries, or you bought cappuccinos the whole month, whatever it is, or Coke, or I don't know what it is. But is there anyone that hasn't spent 500 Rand on themselves and they can safely say, here I am, Lee, I haven't spent 500 Rand on myself? Meaning, if we all can build our own bonuses with as little as 500 Rand a month. And that's money, that's your money. That's money that you enjoy however way you want to enjoy. Whether or not there's a bonus in your business, if you can save more, absolutely. You are not bothered because you've got this 13th or a quarter of a 13th paycheck for yourself. Then you look at necessities. Now, necessities are, there's the obvious ones, the housing, the groceries, school fees, etc. Then there's the things that we never put in there, but we think of as an afterthought. Grooming is part of your necessities, right? No, guys have to shave or whatever. Ladies must plait their hair, or I don't know what, shampoo and roll on and all sorts of things. Grooming is part of your necessities. It's not something you think about at the end. You think about at the beginning. Then work and school lunches, a very big one. I don't know why we never put this in. We often want to group it up as part of groceries, but it's not if you think about it, right? How many people buy bread once a month? Very few of us, and freeze it. right? The rest of us will buy groceries, but when it comes to work and school lunches, we will go to the canteen. We will order Uber Eats. There's someone that sells stuff in the workplace, and we will buy from them. That's money going out. Plan for it. Plan for it and say, if I'm going to be buying in Cape Town, there's a culture of pastries and small little eats in the workplace that people bake at home and then they come and sell at work. Plan for it. No one's saying don't have it, but just plan for it. And another one under necessities that we often neglect is childcare and the cleaner and cleaning supplies if you don't have a cleaner. That's important. It's something you can't do away with. So the necessities line is probably the most important line in your spending plan. After debt is a legal obligation, pay it off. Make a plan to pay off your debts. Make a plan to live free and live within your means. And then your utilities being electricity, a big one right now. It's winter. Be careful of your electricity bill. The electric blankets are coming out. The electric heaters are coming out. People are saying electric heaters are more expensive than gas heaters, but they're spending more gas than they are electricity, etc. You think about your situation. This is how much you are getting in. How much of it are you allocating towards utilities? Internet, data, airtime. Is data, so one of the questions that we ask is data a necessity or is data a luxury? Only you can answer that question for yourself, depending on your situation. DSTV, Netflix, Showmax. Are they all necessary? Can I do with two? Can I do with one? How do I work around it? And then transportation as well. Think about it. So don't say Uber is, I think Uber is going to be 1,000 Rand a month. Know how much Uber is. Know how much it is. Leave home and go to work and come back. Know how much a taxi is. How much is it? It's not a thumb suck. It's not, I put away 500 Rand and I think it's this. Know how much it is so you can hold yourself accountable. Licenses, if you're driving, new licenses or the renewal thereof, plan around that. Your driver's licenses as well. And then enjoyment, very important. Leisure, entertainment, there's hobbies, there's travels. And then that category in the corner called gifts and spoils. Be careful of that category. That's probably one of the, I say it's probably one of the biggest, it's a slow poison because you get invited to so many weddings, so many baby showers, so many birthday parties. I mean, I don't know how many June babies I know personally. I just attend one June birthday party every year. The rest, I honestly have a coffee with, or I write. I'm a very sentimental person. I write people letters. Dear so-and-so, you mean the world to me, etc., etc. And it costs me nothing. Because all that money then goes to leisure, entertainment with people that I want to be around. Sometimes it's even with the birthday people. Then hobbies and travel. So really what we're saying here with your income is you can live a very comfortable life when you plan accordingly. And when we say here, reward yourself, the line items of reward yourself and pay yourself, we're talking about delayed gratification. Learn to say, I can have it tomorrow. Yes, I want it, but I can actually have it tomorrow. I hope this has given you a bit of an overview. The important documents folder, we don't have too much time, but I'm going to go through it very, very quickly, Philippa, if you will. But the important documents folder, there should be a folder in everyone's life that has all the important documents readily available for someone. It's not helpful when you say they are in Dropbox and no one knows they're there. It's not helpful when you say they're in the drawer at work and no one knows that they're there. What are we talking about? Certified copies of IDs and passports, certified copies of birth certificates, marriage certificates if you're married, a comprehensive list of assets, especially if you've got beneficiaries attached to them. If anything happens to you, it's not only about death. Sometimes you are stuck in Sri Lanka. You went hiking on some mount, whatever, you are stuck and we can't get hold of you. Where do we get hold of anything related to you? This is what this important documents folder is. And then the comprehensive list of debts. If you are no longer around, your debts need to be paid. Are they insured? Who are they? What are they? How do we contact all these people? Insurance policies, where do we get money out when you are lying in hospital and you are not speaking and you've just had an infection in your, I don't know, your wisdom teeth? It's not only death. We need to be able to say, right, we remember that that kind of condition is covered. She actually qualifies for a payout right now. But where is it? Who knows about it? This is not something that you speak to everyone about. It's your confidant. And I say sometimes some people say their confidant is not necessarily their sister or their husband or what, well, whoever. But there must be someone that knows where we can find your documents when we need them, when you are not in a position to give us that information. I hope that's given you food for thought. I know it was a lot. It felt like a speedboat, but I hope you did grab a few things here and there.
Oh, Lee, I think that was fascinating and incredibly helpful. You're a wealth of information and knowledge, and I'm sure that people who've attended today will agree with me. So thank you.